A very good afternoon and welcome to Midcap Radar. I'm Ekta Batra and with me is Sonal Bhutra. Well, it's turning out to be a session where we are seeing a lot of consolidation in our markets. So we are flitting between red and green at this point in time. The Nifty is down around 0.2%. The bank Nifty is also flattened out. We did see some amount of buying which had come into financials, but there is selling which is taking place at higher levels. There's a lot of stock-specific action, sector-specific action from the pharmaceutical space to the media space, and media is really the big talking point for today. Hi, Sonal.
Hey, Ekta, good afternoon. Yes, of course, and we'll discuss all of them in greater detail, right? But first up, we'll run you through all the headlines that we are tracking at this hour. Another volatile session of trade stocks saw after holding ground despite a weak US close. Realty and media see good gains, even as energy perks up, IT and consumer durables drag.
Adani Group picks up 29% stake in NDTV and announces an open offer for another 26% stake. But NDTV promoters, the Roys, with 32% stake, say they were kept in the dark on this move. The stock gains. The development also boosts peers like Zee Entertainment, Sun TV and TV Today.
Chennai Petroleum perks up after it inks a JV for a 9 million tons, 31,000 crore rupee refinery.
Arvind Smart Spaces surges after an agreement with HDFC Capital to build a residential development platform.
Apple India gets a leg up after Goldman Sachs says it expects the company to clock over 30% annual growth till 2025. All right, those are the top headlines that we are tracking at this point in time. But a quick look at the markets. The Bank Nifty has recovered a tad bit from the lows. It is in the green as we speak. So it's a 10-point uptick on the Bank Nifty. And we also have the mid-cap space that is seeing some green. Okay, again, so it is a volatile session that we are seeing today. Of course, it's the expiry week as well. So last star trade today, tomorrow will be very important to watch out for. While we have a lot of market-specific action, there's a lot of stock-specific action as well. So let's talk about GHCL. The stock is up nearly 62% so far this year. We have R.S. Jalan, who's the managing director of the company, who's joining us now to talk about the company's outlook and the business going forward. Mr. Jalan, good afternoon. Thanks a lot for joining us. Well, quarter one has been a very strong quarter for you, be it on the textile side or on the soda ash side. How much have soda ash prices risen by in quarter two as well? Has that strength continued? And for how long do you expect these prices to stay firm at these levels?
Yeah, good afternoon and thank you for inviting me for this call. You see, basically soda ash globally, if you look at the soda ash demand has been quite good. Last, I would say more than a year now, the demands are on upside, whereas the new capacity has not been added. And this adds to the kind of a tightness in the overall global market. Second, as you know that overall the energy, because of the Ukraine and Russia war, energy prices has also been on the upside. The cost has also gone up. On the other side, the prices has also gone up. In the second quarter, I would not say that the price increase has happened, but the price are getting absorbed, which has been increased in the first quarter.
Okay. All right. Mr. Jalan, you know, that's exactly what Tata Chemicals said, that the demand for soda ash is extremely strong, especially also in markets such as India. So what does that translate in terms of growth for you, revenue growth for you? Because you're working with a scenario where demand is strong and capacities are still not coming on stream for excess amount of production. So in that scenario, what would that mean for business for you in terms of sales?
In terms of the sales, if you look at in this quarter, in the first quarter itself, our revenue has grown, company as a whole, by around 100%, from 700 crores to around 1400 crores. And if you look at in that, the major segment of the contribution is from the soda ash. Soda ash has grown from around 527 crore to around 1100 crores. So this kind of a scenario of the growth will continue going forward. And overall, our belief is that in terms of the revenue growth, it will be approximately around 25–30% growth will be there during this year.
And what about margins? Mr. Jalan, will you be able to maintain it at current levels, that is around 31%?
Yeah, I think so, because like I said, overall the demand scenario continues to be good. And except in the rainy season right now, as you know that overall, historically, the soda ash demand in the detergent side is slightly on the lower side. But if you look at year as a whole, you will find that this kind of a margin, we will be in a position to continue.
Okay, all right. So you would continue with these kind of margins. Just a little more in terms of exports for soda ash. Could you just break up how much you get from the domestic business, how much you get in terms of exports?
See, basically, soda ash is a business where the major supply which you have to make it to the domestic players. And since there is a overall demand tightness, as I told you, there is no big up, I would say, incentive for us to kind of an export at this point of a time. So we are not doing, of course, we are doing around 5 to 7%, but not a very significant amount. We are not doing the export at this point of time.
Okay. So that takes me to your expansion plans as well. You have some expansion plans in place. You are talking about doubling your RBC capacity, increasing your soda ash capacity as well. The RBC project you said will come on stream by second quarter of FY23. Has it already come on track? And what about the revenue expectations from both these capacity expansions that you're expecting? And by when will it start showing in your books?
You see, if you look at the sodium bicarbonate, there's small delay in that, and most likely in the third quarter it will get commissioned. And that will approximately, we are doubling around 60,000 to 120,000. That will be approximately add to approximately around 100 crores kind of a top line growth will be there in that. In terms of soda ash production, as you know, we are setting up a new greenfield project with a new location, and that will take some time. We have given a guidance of around 25. It will get commissioned in 25, and after that, advantage what we'll be having is from that capacity, we have a large site of land there. So we can continuously expand our soda ash capacity there, and even we can look at a possibility of some of the other chemicals opportunity also there. So that journey, of course, the volume will come in 25 only.
Okay, all right. Mr. Jalan, you have a spinning business which you were planning to demerge by next month. Where do plans stand on that?
Yeah, in the third quarter, the shareholders has approved, and even the unsecured case, all the approval has been received. Now we're in the process of filing to the NCLT, and I think a couple of months it will require to get an approval of NCLT and then kind of doing other formalities. And hopefully in the next quarter, means third quarter, this process will get completed.
Okay. And what about the proceeds that you were going to receive from Indocount? You said earlier that you have received 300 crore rupees. Rest you will be receiving in some time. And once those come in, what will the debt figure look like? What is the current debt for you?
Approximately around 600 crores is the debt at this point of a time. And if you look at this, the money which we have got from Indocount of approximately around 600 to 700 crores, which is primarily being used for the expansion in the spinning business as well as in the soda ash. And as well as some money has gone into the, as you know, that all the raw material prices has gone up. So some money has gone in, even in the working capital also. And my understanding is that by year end, we should be in a kind of a debt-free kind of a situation at GSL as a whole, which is around 600 crores of the debt at this point of a time.
Okay, all right. So you're looking at some amount of cleanup in the balance sheet as well. Mr. Jalan, you did guide on margins, but I specifically wanted to ask you about the textiles business in terms of the margins for Q1. It had reduced to around 23.5%. How is business looking now when it comes to, say, raw material costs, input costs, especially for the textiles division?
As I have been mentioning in last 2 quarters, the spinning business at this point of a time is slightly on the lower side because, as you know, the cotton prices has gone up very significantly high, and demand for the, I would say, for the end product like garments or the home textile is on a downward trend, and because of that, the spinning business is getting some impact overall in India for the entire industry. And but like I said in the past also, that I see if you look at it slightly medium terms, spinning business will continue to do good. And overall, maybe in third quarter or fourth quarter, things will be looking up again. In terms of the margin, some impact will be there in the margin in this quarter. But overall, like I said, our guidance of around 16-17% margin, which we have been achieving in the past, we will be able to achieve that.
Okay, all right, Mr. Jalan, it was a pleasure speaking with you. Thanks a lot for joining us and giving us all those details. So that's the word coming in from GHCL, expecting a revenue growth of 25 to 30%, expect to maintain margins at the 31% mark. The soda ash market, that continues to be very, very strong. On that note, we'll slip into a short break now. Up next, we'll have Samit Chavan of Angel One for a quick technical check on the market. Stay tuned. Hi, welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Well, volatile session. We have seen some recovery in the Midcap Index and the Bank Nifty as well. In fact, the Bank Nifty is up 105 points as we speak. So majority of that buying has come in last couple of minutes. So it's a good time to get a technical check on the markets. We have with us Samit Chavan of Angel One joining us now. Samit, there has been some recovery from the lows and a sharper one at that. What are the charts suggesting? Will there be more buying at these levels?
Good afternoon. See, market, recently had a vertical rally first, if we talk about Nifty from 16,400 towards 18,000. And then, in last 3-4 days, we have seen some correction. So Nifty and Bank Nifty both have, completed their correction 3.5% and 5%, respectively. After, yesterday, Nifty formed a good, support somewhere around 17,350, and from there we witnessed a good recovery. Now, with a, monthly expiry perspective, we expect some consolidation with a positive bias. So at lower levels, you are likely to see some sort of buying interest. But at higher levels, like, for Nifty, the levels would be somewhere around 17,700 to 17,750 would be seen as immediate resistance. And for Bank Nifty, the levels would be somewhere around 39,200, 39,400. These are, to be seen as immediate resistances. But around the lower levels for Nifty, 7,500 should act as a support. And for Bank Nifty, it would be 38,500. So one should trade with a positive bias. But, individual stocks are providing opportunities on both sides. So one should keep focusing on such, potential candidates.
Okay, so which are those potential candidates, Samit?
See, media space has been buzzing since last couple of days, and Sun TV is the one stock that has caught our attention. If we look at its price action, stock is sustaining about its important moving average, 200-day moving average since last 5 to 6 trading sessions, and today prices have seen some upsurge. So looking at the volume activity, we expect the stock heading towards 518 with a short-term perspective. It can be bought with a stop around 492, and with a trading burn, we expect some profit booking in SRF. SRF has been maintaining its position below 20-day moving average since last 3 days. So we expect some correction in this counter. 2290 is the target to watch out for as far as SRF is concerned. And one should keep a strict stop loss around 2430 for SRF, and one can go short at current levels.
Okay, all right, Samit. Thanks a lot for joining us and taking us through your technical bets. So with that, we'll move on to our segment, Midcap Movers. We have Sonia with us to take us through the midcaps that are moving around in trade today. Hey, Sonia.
Hi, thanks for that. Well, let me start with the 52-week high stocks. So you have plenty of them this afternoon. We kickstart with Ujjivan, then there's Jyoti Labs, Star Paper, ITD Cementation, Uflex, all of these stocks sitting at fresh 52-week highs as we speak, and a lot of big moves coming into many of them as well, 5 to 7%. Then a lot of banks are surging too. So if you look at it, there's RBL Bank, IDBI Bank, IDFC First Bank, Bandhan and Yes Bank that are doing pretty well. In terms of volume gainers, you also have names like Indiabulls Real Estate, there's Dish TV, there's Kalyan Jewelers that's seeing big volume gains this afternoon. And on the losing end, you have names like Zomato, Suzlon Energy as well as Lemon Tree Hotels that are sulking both on the volume as well as on the price charts. Back to you.
Okay, all right, Sonia. Thanks very much for that. Need to take a short break, but a quick reminder for our viewers, it's that time of the year again. Money Control Pro's financial freedom offer is back with added benefits. Get a Money Control Pro subscription at net zero cost by claiming exciting offers worth around 1,500 rupees from our partner brands. Grab the benefits now only on the Money Control app or website. Welcome back. Well, let's get talking about a couple of more companies, and this is in our segment Midcap Spotlight. Sonal is going to tell us about a stock that has gained nearly 35% just in the past 1 month. Sonal, tell us more.
Oh, well, yes, I'm talking about Hikal. Reported really weak set of earnings in Q1. In fact, it was a washout. Look at the numbers. But despite that, we are seeing a big surge in the stock. It is up 7% today. It's up 35% this month as well. And since its Q1 results that it reported on 11th of August, the stock is up 27%. If we take a look at the numbers, nothing makes us understand why the stock has seen such a big surge. Revenues were down for the company. We saw a sharp decline in their EBITDA also by around down 76%, operating profit margins down 1,500 basis points, and the company reported a loss versus a profit in this quarter itself. However, the view is that it was a one-off quarter. Going forward, there is an expectation that the fundamentals of the business will improve. In their conference call, they spoke about their Taloja unit, which is around 15% of their crop sciences revenue, that saw a shutdown because of a pollution board notice. They said the loss from that particular unit was 50 crore rupees, 20 crore rupees. However, the pollution control board issue is still sub judice, and company has a better legal position and a stronger position here to win that case. Raw material prices going forward is now under control. They are falling, and they expect major benefit to come in from Q3 as well. Average revenue run rate of 500 crore is what they expect, and they expect it to actually increase in staggered manner in coming quarters. All the new products that they are talking about or introducing in the market are high margin products, around 20%, with an asset turnover of 1.5 times, so that bodes well for the company. FY23 will be a washout year or a stable year for the company, but FY24 will see growth in mid-teens and margin expansion of 50 to 100 basis points, and a cheaper stock comparatively, so that's the reason why the stock has seen such a sharp move after the conference call and in management commentary.
Okay, all right, Sonal, thanks very much for that. So that's on Heikel. But the other one is Goldman Sachs, which has initiated a buy rating on Affle India. Sonia standing by to tell us why the brokerage is bullish on this mid-cap.
Thanks a lot for that. So Affle India, as we know, is a mobile advertising company, and it benefits in a big way from the increasing penetration on the internet, rising e-commerce, etc. And that is the basis on which Goldman Sachs has initiated a coverage on the stock. They have a buy rating with a target price of $14.95. They say that rising internet, smartphone and e-commerce penetration will benefit Affle. In fact, they're expecting Affle's revenues to grow 32% compounded over FY22 to FY25. Now, they also say that Affle has currently multiple moats, whether it's patents, platforms, a first mover advantage in India, and all of this will help them gain ground as far as revenues are concerned. They're also focusing on a lot of high growth categories, whether it's education technology, food technology, e-commerce, and this will help them in taking the growth forward. So 32% revenue compounded growth, a 40% EBITDA compounded growth is what Goldman Sachs is looking at, and they have initiated a coverage on the stock. Back to you.
Okay, all right, Sonia. So that is about Affle, but there are certain updates on the pharma MNC space as well. Abbott and GSK on your radar, Ekta?
Well, yes, CLSA has written on Abbott. They have a buy rating. They've raised the target price. They expect this. They've said that the company has delivered double-digit growth in FY22. Despite no COVID-19 product in the portfolio, the company is seeing incremental competition from key brands such as Dufiston in their key brand, which is Dufiston. And the focus is on introducing new key therapies, which should support medium-term earning outlook. They've tweaked their EPS by around 1 to 3%. GSK had a management meet, so they've indicated to analysts that basically 78% of their business is from prescriptions, 22% business from vaccines. Prescription business is skewed towards the acute segment, which is basically cough, cold, drugs which are not needed all the time, but only for certain conditions. That's 95% of their portfolio. The prescription business is expected to deliver strong growth in Q2. The company is also guided towards an 8 to 9% price hike in FY23. Future levers of EBITDA margin expansion are around, for example, led by growth in promoted brands, new launches, cost-saving initiatives. The main pain point is vaccines business, which is sluggish due to industry growth, hesitancy, delay by patients, which was caused due to COVID-19, but they expect the demand to revive in FY23. The company is also going to launch its first ever shingles vaccine in first half of FY23 for those above 50 years of age. Morgan Stanley has written on GSK. They have an underweight call target of 1416. Rich valuations and relatively lower growth profile keeps them underweight.
Okay, those are the updates on some of these bigger MNC pharma names. But let's move on and get you some important corporate commentary which is coming in from the oil and gas space. Earlier today, we spoke with Mr. Pawan Kumar, who's the Director Commercial at IGL, who spoke about the recent increase in domestic gas allocation and what happens to the pricing after this. Listen in.
Allocation has in fact decreased for IGL. Earlier we were getting around 6.5 million per day, but now it is around 6.06. So allocation has almost come down, but it has benefited IGL because earlier we were getting pooled gas at a higher cost, which was around 10.5 to dollar per MMBTU, but now the weighted average cost is around $7.50. So it has significantly helped IGL to bring down the input cost. We should encourage the customers and the general public at large for buying CNG vehicles, and we encourage them for conversions so that we have a bigger market. So we have a long-term view so that we don't lose the customers. So since we didn't increase the prices, so we are not going to reduce. As of now, we don't have any room for price cuts because we are absorbing whatever hike we absorbed, we are compensating that now.
Okay, so that's the word coming in. We need to just shift focus towards the markets because it seems to be quiet, but there are divergent trends playing out. The market really can't decide what to do with the financials today. They don't know whether they want to buy the stocks or sell the stocks. Currently, the Bank Nifty is up around 0.3% at this point in time. At one point in time, it had completely flattened out, and you can see it on an intraday basis, the jagged edges in terms of the intraday chart for the Nifty Bank. For the Nifty, just about lower by around 16 odd points. The Sensex also lower by around 57 odd points. The street is probably looking at what the Fed chair is going to say in his speech on Friday, and that's going to be indicative of whether or not the Fed is going to be as aggressive in terms of rate hikes going forward or not. On that note, it's also a wrap on Midcap Radar. Stay tuned, more shows and more perspective coming up.